bid and ask. Here we are. We have that 615 call. Yes, it was $19.70 on the high. This is true. And one of the things that we would like to clearly demonstrate, where my pointer is how to buy that mark down at 770, then sell back to the public $3 up. One of the things that we've been talking about is that very nice intraday bottom that Google has chosen to put in. Why is that? Well, it's very simple. At this price action line right here, the SMF platform says I don't go lower. When I start to make my break, I make break number 1. I test the original breakout, half of that value, and then I ascend higher. I come back, and I'm right here right now at these major tops from the original lows here, this line here. So that's 1, 2, 3. Our system works on the first set is always 3 teenies up, then 5 teenies would be here, and then ultimately right up here at 629 is 7 teenies. Just as it had went down 7 teenies mathematically, it can go up 7 teenies in an ascending value, because once the market has been fleshed out on the intraday bottoms, these are how these bottoms form. And you're not blowing out, and this is the live trading example on how to buy and sell to the public. How do I buy and sell to the public and make money out of it? And what kind of platform do I have backing me up? And why is it so accurate? And you can always find out more. And how do you do that? Well, MMTs, you're at 34. If you go above 35, we will have clear directional. Our next stop is going to be the 5 teeny breakout. So far, we've made 3 off of the bottom right here. And we're at number 3 stage. In order for us to get to 5, this current trend ratio will have to go toward 10, then toward 20, and 30. And you were up 0.44 at one point. You were up 7.04 teenies. That equaled $11.34. Right now, your teeny value is that you're not even up. You're 0.32 right here. So you're up 52 cents, but you're about to break the highs. And you're at 35. And you still have 2 teenies to go, which would also dictate the option price that I have clearly stated to limit out at $11.90. Okay? Yes, the public got marked down from 1970 to 770. Yes, they did. And then buying that lower value down here and then selling it back to the public up here is our primary focuses. That's why we do the things that we do. And we understand the directional movement using our application. That part, hey, it makes it where the emotion is taken out as you are experiencing MMTs. And that's just the dollar bid and ask rule and an option, and it's a call option as you are trained with, along with the directional movement. They sold it down from 633.80 today to 619.91. But that was the value of the 615 call right here. Right here. This one. 615 call. 1970. It's a weekly. Okay? And you can clearly see how it was marked down. That was the close. But you made a high, and then you have the low. And there's 494 contracts. And people were buying in here how to make that dollar up movement. So the original entry off of the lows were 870 by 920 and 970 selling at 1070 and then getting back in at around 1020 and selling 1190 actually. And we have to see if we break up to 1150, and this is all live and live market hours right now, and it's trading Google call options relative to the actual trend movement in Google, and we can clearly see the amount of movement that we're getting. And so I just want to point out how you buy the discount as a market maker to the bottom and then sell back into the public. We're going to see if we hit that order on that $615 call. We're just grateful that we're able to show you how to get those low entries. And then the exit plan, the exit plan is where people fail intraday. Yes, it's very easy to buy something, but how do I know when to exit? Well, there's one way of knowing. Once again, we are going to pull up this movement, and you're above 35. Everything, you're plus 3, and if you go higher toward 10, you're going to break higher, and you've got a higher diamond. And you finally broke these tops intraday right now. And when you are buying a movement down here, and you're buying that call, and you're selling it for $3 and $4 profit, sometimes $2 profit, $4, so whatever it's willing to give you from the wholesale entry. See, the high was 1970. That's all retail up here. Right where the pointer is. That's right. And they marked it down from $670. That was our exit price. We owned it. And we have, in 2011, in the last quarter of it, we were really trading Google to the long side. Our price target was 670 and a 670 short. Now you're putting the bottoms in right here. And so now the reversal is working. And you can see here the value of the 615 call right here. It's still way underwater of 1970 and not even back to the previous day's close. Okay? This is how we make our decisions right here. We use the application as we always do in directional movement. So there's a lot of strength that built in this bottom. This is the bottom. Okay? This is the ascending part. This is your expansion. 1, 2, 3, going on 4. 5 is going to be right up here. Okay? And earlier, when we were entering these trades, I talked about you got to get through 624, and that was from the original bottom, which was 1, 2, 3. There's a pit stop in this price level because it brings it back over here in this half bar area that it will have to clear and keep that move running higher. And keep that move running higher. And this is the way that it's going on very light volume. So I hope that I've been helpful. It is elevated, and you can clearly see that your bid and ask in the level 2 is rising above the previous diamond areas of resistance, price resistance. And that's the strength of a bottom of a stock that we took it up to 670, but from 670 down to 616.91 is where you wanted to be the new, and still can be the new buyers, because that is definitely a firm bottom as of 11:25 a.m. Pacific Standard Time. Date 1/10/2012. StockMarketFunding.com. Info at StockMarketFunding.com. Learn how to trade breakouts. We are breaking out, and we're at 1180. So MMTs, a limit order out at 1190, and if it falls weak in here, you can always put a limit out, say at 1170. Contract the market on the exit. See, exiting there. Now we're at 1190, and that would be that sell target, and that would be how this bottom is going to be built. And that's how that leverage up process in a bid and ask format as a market maker was, that the buyer's definitely in control. And you're coming back to 45. And you're elevated here. And you're going toward 10. You're going the right way. You're 7 right now. Right here. Your TR is going to support that 7 reading right there. Your current trend ratio is going to support there 11.50 by $12. You can try to get more out of it because you can. And there's that breakout bar. And it's 12.20 now by 11.80. And it is breaking out in price. Okay? Right here. And that's how a bottom is put in. Intraday bottoms are put in using the platform correctly. This was the bottom. This was the expansion. Then it was how I would buy the pullbacks. But then how were you going to get up here and get up to the teenies that I told you, MMTs, and why it would go that way? And it's live with the live entry and exits. Look at it. And that's how breakouts happen. That's how lows are put in intraday.